Are we in a housing bubble? Well, as we get into the middle of the second quarter 2022, many people are asking, is the market about to crash? And why would they ask that? Because over the past 3 years of the pandemic and the government stimulus and the interest rates, as well as the supply and demand, the prices of homes, as you probably already know, have increased double digits, 20, 30% in some areas. And many people now are considering, okay, how long is that going to last? Well, the reality of it is that the real estate market is probably not going to bust. We probably will not have what happened in 2007, 2008 happen today. Why? Well, mostly because what happened in 2007, 2008, if you recall, when the market had crashed, that was a result of lending guidelines before during the early 2000s, 2002, 2003, 2004, and even in 2005. They would have the breath in the mirror test to see if you could get a loan. If you could breathe and you could fog up this mirror, guess what? You get a loan. I mean, there was almost no oversight in regards to the lending practices. Well, because of the Dodd-Frank bill that had occurred around, I think it was 2009, because of that, they put oversight into lending practices that still exist to today. So you really have to consider, like, what has caused the prices to increase, and I've already mentioned those things such as inflation, interest rates, etc. And as you understand that, you'll realize that the market will probably not continue to increase, certainly not at the pace that it has been yet, will probably taper off. At some point, the buyers are just going to say, you know what, the prices are too much, okay? So what you have to understand is that the supply and demand right now is that the inventory in most areas is benefiting the sellers. There's a thing called the Consumer Price Index, and what that says is that each type of home, except for the lower price single family homes here in the area, in the DMV area, is that the index is suggesting that the sellers have the advantage in today's market. So the most significant increases in the index were in that mid and higher price single family home and the higher price condominium segments. And so there's been certainly gains anywhere between 13, 15% year over year in those markets. And that's put on top of an already existing anywhere between 10 and 12%. So overall demand was strongest in the highest priced single family and condominium segments. And that's where the demand is in the most part. So as a result, the inventory conditions remain tightened, very, very tight in today's marketplace. And that's really because there's more demand than there is supply. So if you're looking for opportunity, the opportunity would be probably to sit on the sidelines if you're in the place to buy right now for investments. If you're in the place to buy a home, you have to remember that the interest rates are going up. So even though that the January of 2021 was the lowest interest rates ever, and by today they are increasing into the 5% range, but you have to understand those interest rates are going to probably continue to increase. So if you're looking for a purchase to buy for a home, you may want to consider to do so before the interest rates rise. So if you have questions about how I can help you at all, please reach out to me, dan@greetingsvirginia.com. 703-346-2776. I know every nook and cranny here in the DMV area. I've been selling homes since 2007. Would love to be able to answer your questions, and I'll talk to you soon.